everyone, Lisa Steffen, American Pacific Mortgage, your mortgage professional, and welcome to Market Monday. I am so excited today to have Teresa Olson from National MI. Thank you so much for being here. We're going to talk all things mortgage insurance. So Teresa, tell us a little bit about yourself and what, when you're not doing mortgage insurance and working, what do you like to do for fun?
Oh, well, thank you, first of all, Lisa, for inviting me to this opportunity. I work, like Lisa said, I work for a company called National Mortgage Insurance. I've been in the industry since 2000. I have had many hats. I've been, like Lisa, an originator. I've been a wholesale rep. So I have a lot of experience in different pieces of this industry, and I find it quite exciting and enjoyable, and enjoy sharing and helping others. My free time, I actually have 2 new grandbabies, so that is the highlight of my world right now. I call them my COVID relief. It's just really special. I had no idea I could love anything so much, but yeah, that's really what I've been enjoying.
Oh, it is. It's so true. The love you have for your children is amazing, but the grandchildren are just, they can wrap you around the little finger
Oh
very
yes,
quickly.
I am so wrapped.
I know. I hear you. I hear you. Well, I'm really, like I said, really glad that you're here today because I think there's a myth that's still out there today that people think they have to put 20% down or do like a government program. And as we know, you don't need to do that, that you can do as minimum, as little as 3% down. So tell me why it's good to have MI or why it's needed.
Well, Lisa, as you just said, the biggest reason that mortgage insurance is beneficial is because your customer will be able to keep their cash flow and put less money down. You're right. It used to be that the customer had to come up with 20%, but now the lenders have the capability of offering more programs to your customers with the mortgage insurance on it.
Right. And so that's so true with having that cash flow to go. And especially right now in these times, you don't want to empty out the bank account if you don't have to.
Yeah, isn't that true?
Yeah.
Absolutely.
And what's the benefit of going on a conventional having a MI through you as opposed to like FHA?
Oh, huge benefit. You have the capability of canceling your mortgage insurance when you go through a conventional loan or private mortgage insurance. Whereas with FHA, you do not have that advantage. So not only do they have more cash flow, but they have the ability to cancel the MI when it is time. And one other thing that people often miss is if they add just 1% of mortgage insurance to their mortgage, they actually can reduce the rate of that mortgage for the life of the loan and still remove the mortgage insurance very quickly.
Oh, that's great. So they're doing what's called a single or a split premium. Is that what you're
No,
meaning?
it's not a split premium. It's actually the LPPAs fall off, the loan level adjusters will fall off. And that makes, because the loan now is a less risky product for the GSEs to purchase, it reduces the rate for your customer.
So where is the breakdown of the rate? And we know that there's a 3% down program, and when the higher the loan to value is, the higher the premium is. Does it? Can you explain how it goes down if people do put a little bit more down?
So, well, yes, of course. The way the mortgage insurance companies have their pricing set up today, and this is pretty new for everyone, it's risk-based. So there are factors that are put into, that are naturally there with your customer, whether it's a high credit score, low credit score, high LTV, lower LTV, the DTI, the debt to income, anywhere from 7 to 15 different factors, depending on the MI company you use. We're 7. We have 7 factors. And that's the credit score, the DTI, the zip code, the LTV. There's two more. Anyway, there's a couple more in there that when we go through, and it gives you this price for the customer. And if any of those variables change, the rate will either go up or down. So it's like a fingerprint. Every customer has their own risk factor.
That makes sense. And the one thing that I find too is, especially if they have a decent credit score, the monthly mortgage insurance premium is a lot less than it is for FHA. So they're going to be
That is correct.
Keeping a lower payment, which is great. Now you'd mentioned that people can cancel the MI, which they can't on an FHA. When is it that they can cancel that?
That's a great question. The base loan amount, the original loan amount of your mortgage is what we're going to utilize. At 80% LTV, your customer is able to pick up the phone and call their servicer and request that they cancel their mortgage insurance. Now, if they forget, at 78% LTV, it's supposed to cancel out automatically. So I tell people, let their customer know to pick up the phone at 80% LTV off of the original value, and they can get rid of it.
And if they've been making extra principal payments during this time, is there a certain amount of time minimum time that it has to stay on?
No.
So
no, there isn't, Lisa, and there is some confusion. If the customer wants to pull in equity to their value of their home and they are not using the original price, then they have to wait a 2-year period and get an appraisal. However, going off of the original mortgage price, it can be in 3 months. Let's say like the 1% example that I used, adding 1% mortgage insurance lowers the rate for the life of the loan. They can turn around and cancel that mortgage insurance as soon as they get to 80%. And it can happen very quickly, 2-3 months.
Mm-hmm. Right. Well, this is really great. I think that there's a lot of confusion out there from consumer standpoint as far as mortgage insurance. And, I think it's really important to let people know that, rates are so low right now. And if you don't have a big down payment, that doesn't stop you from buying a house. And that's what it's all about, is home ownership.
Exactly. More options.
Yes, definitely. Well, thank you so much for being here. I really appreciate it. And if somebody has questions on mortgage insurance, is there a better way to get a hold of you than another? Do they just call you?
They absolutely can give me a call, Lisa, but I actually have, I do have a prepared video that I'll forward to you. You can share it if you would like, on the steps of canceling your mortgage insurance. And also I have a flyer that you can, email quickly to everyone. But any one of those ways, they can call at 425-770-3246. Feel free to text, or they can connect with you.
Perfect. Well, this is great, and we have all your information here at the bottom of the screen. So you make it a great week, and we will talk soon.
Thank you. You too.
All right. Bye.